Good afternoon. This is Kathy Neifeld. I am one of the partners at Agency One, and I would like to welcome all of our friends from both Agency One, Broker Service Marketing Group, and Business Underwriters Associates to this webinar featuring one of our really important carrier partners to all three firms, which is MassMutual. We are thrilled to have this MassMutual relationship, and we rely on them heavily and have been getting some really phenomenal underwriting results and have been placing some phenomenal business with MassMutual. With us today from MassMutual are both our external Kevin Shannon and the Director of Advanced Markets, Randy Zipse. For those of you that do not know Kevin, he is a managing director for life insurance and is responsible for the Northern New England and Mid-Atlantic regions. And he helps our clients create comprehensive financial plans, including products from MassMutual's life insurance portfolio. He's got more than 15 years experience as a life insurance wholesaler throughout his career. And prior to MassMutual, he was named, congratulations to you, Kevin, Brokerage Wholesaler of the Year at Transamerica. Kevin is somebody that we can rely on to get things done, and I and everyone at Agency One is thrilled that we have him at a resource. And then also our second speaker for today is Randy Zipse, and I am just, give me 1 second because here we go. Randy is the advanced sales lead for MassMutual and has worked in the industry for the past 25 years, where he has managed advanced sales departments for major life insurance carriers and independent distribution organizations. Randy is a featured speaker. He is a featured author. He is also an attorney that worked previously in private practice. Randy knows how to solve problems and is a phenomenal, one of our top resources at Agency One. And we are thrilled to be able to call him a friend to Agency One. So thank you for that, Randy.
Thank you. And yeah, I'm just a friend of Agency One. That's enough. I'm there to help you guys. Boy, Kat, it's been a long time. That I got to update that bio. It's been more than 25 years. I think I've been working with some iteration of some of the people on the call for, I think it's 31 years now. So it's been a long time.
Well, Randy, you need to update that bio, and you've just made yourself 6 years older. So that was on you.
I'm learning it.
Yeah, I hear you. So Randy and Kevin are going to talk about some new products that have been launched at MassMutual and how you can use them in your practice and the success that they are seeing. We're going to start the webinar with Kevin, and then he's going to turn it over to Randy. This should take about 30 minutes. If you have any questions, please type them into the Q&A, and we will address them when there is an appropriate time to break with Randy and or Kevin to address the questions. So without further ado, I am going to turn this over to Kevin. Thank you.
Thank you so much. It's fabulous to be with you today. We've been looking forward to this call for some time, and gosh, you guys have been a favorite for a long time, and we love working with you in the partnership. And you're right, we've done some great business together, and hopefully that's us creating some value in your practice. And we certainly will talk about that today. A lot of this too, I love bringing simple solutions that are relevant. And that will be what we're going to discuss today. I'll get into kind of who we are and what we represent. At the end of the day, at the end of the call here, you see the UL Guard and SUL Guard. We're going to relaunch a product here with you today that I think is very relevant in the brokerage business. Randy will talk about some practical solutions. We both will touch on where we've had some successes, early successes with this product, and leave you with hopefully a couple ideas you can bring back in your practice to bring relevant solutions to your clients. So that is our hope today. I'll kind of give you a 2-minute elevator pitch on who we are. You might be wondering who MMSD is and what they represent. Randy and I have been here since the beginning. We started about 4 years ago with the sole goal of MassMutual wants to be the #1 distributor in the U.S. In order to do that, they knew they had to make a relevant distribution in the independent space. You may have done business with MassMutual in the past. Just so you know, what we created is a direct corporate contract for the likes of Agency One. So when you're working with your team, Kathy, Gonzalo, Dennis, Bridget, onward and so forth, Ed, with the team, they're working directly with the people at MassMutual. I'm the external wholesaler, but I have a full team of people who have a lot of brokerage experience, whether it's our underwriters, our management team, my other partners in the wholesaling space. We all came from the brokerage world, so we know and understand it. And we want to create the experience for you that you would know and love with, some of your other carriers have been in this business for some time. And I think having that direct corporate contract with Agency One has been a phenomenal experience for a number of folks. Over the past 4 years, we've done the contracting. Where we are right now in this evolution is, we want to make solutions for you that you know and love. MassMutual has been and will be, a whole life company. That certainly is our bread and butter and what most people know us for. But what we're doing right now is building a product portfolio that's relevant in your space. And when I say just from a product standpoint, it's not just the product itself, it's the experience. Kathy alluded to, underwriting. I'll certainly give you a couple of areas where I've seen a lot of wins from an underwriting perspective. I think there's some unique features that we have that could be relevant to a number of you. So it's the experience, the product, how we do business, all of those good things that we've been building over time. You're going to see more of that from us. I think it's really been accelerated. Randy will probably touch on a couple things from an advanced sales standpoint that we're creating that you're going to see in the coming months. But this product we're going to talk about, I don't want you to think it's a new product. It's been on our shelf. A few of you may have touched it at some point in the past. It sat on the shelf and probably was honestly probably forgotten about from a pricing standpoint. The industry moved and MassMutual didn't move with it. But it certainly offers a great solution. So what this is really a relaunch, a reprice, but we also put it on new paper. We know that, in the brokerage business, the one thing with whole life and why that's a great solution is our #1 dividend position. And in order to have that #1 dividend spot, we're a 50-state company when it comes to whole life. And by being a 50-state company, we have to pay New York comp rules. There's heavy-duty renewals associated with whole life that make it attractive, but it is a more renewal-type comp product. What we're starting to do in this business as we create new products is put it on. Many of you might remember Connecticut Mutual. MassMutual acquired Connecticut Mutual back, I believe it was in the late 80s, early 90s, and we still maintain that paper. So as we talk about this solution and why it might be relevant in your book, please know that, from a producer standpoint or advisor standpoint, we're putting these products on Connecticut Mutual paper that allows us to be a 49-1 company. So if you're doing business in a place other than New York, we're paying its first-year comp, and it looks really, really good. The direct to producers is great, and I think you'll find it very attractive. So without further ado, I'll take about 10 minutes to kind of go through where this fits and maybe some special niches you might find useful or attractive in your business. So the product is the UL Guard. We also have it on an SUL, so it's on a single and survivorship chassis. We will talk about some of the areas where we fit. I think that they're both it fits both for both products. So the target market really is the same. If you looked at us 6 months ago, you'd say, "Hey, Kevin, you guys look phenomenal in that older age market," and that still remains true. So if you find clients that can be underwritten and they need a solution when it comes to a guaranteed a UL contract that has lifetime guarantees, we are still certainly relevant up to age 85. The 80-85 market was where it really shined before. But now you're going to see it across the board really shine in that traditional GUL market. So anyone, I hate to put ages around this, but 45 to 75, certainly the target market that is going to be looking at UL people in their 50s and 60s. we've improved. You're going to see that whether you use WinFlex, Insight, rely on Agency One. From a design standpoint, you're going to see significant improvements. And again, you see that we also improved the not only the gross comp that I mentioned, but the target comp has been improved. The target comp, I would say, is now very competitive with the industry. The total comp looks again really good as well. The target market, now this is really important, and again, simple solutions that I think are relevant in this business. Single pays, 5 pays, 10 pays, anything really 10 pay or under. The closer you get to that single pay, the better it is going to look. So if you're going through your book of business and you regularly do life insurance reviews, you have clients that, maybe they bought some type of cash value policy at some point in the past 20, 25, 30 years ago. Maybe their goals have changed. Maybe their product hasn't performed as expected, or maybe the product did exactly what it was supposed to do, but now your client's goals have changed. The kids are grown and gone, and now the adults are looking at max protection for a lifetime of guarantees. 1035 exchanges, that is exactly where this product hunts the best. So if you have, folks, again, old policies, cash value, VUL, IUL, whole life, that is exactly where we're looking to shine. You'll see some examples of, from a target premium, right? You certainly can see all these numbers. I'm not going to go through them directly, but anything, in these single pay, 5 pay, 10 pay, you're going to see improvements on the target comp upwards of 15, 20%. If you look at some flexibility inside of this contract, you can certainly do we'll call it like a dial a guarantee. So you can do shortened guarantees, you can do different premium durations. I will tell you the simple solution is the best solution with this product. You won't see much in the way of savings if you kind of start dialing that guarantee back. Usually the lifetime to age 121 is going to be the best solution for these contracts. Keep it simple. But we can certainly help you out with that designer. I'm sure the team at Agency One can certainly help as well. Flexibility, to kind of talk about some living benefits. And again, this is going to be an ongoing development. This is what we're launching the product with. Certainly some of the highlights are going to be that chronic illness rider. If you look at also the surrender value enhancement rider, I can't call that a return of premium, but we can certainly get into that. And Randy can kind of talk about some ideas he's seen in his book where that's played a role, especially with the business owner clients. But the surrender value enhancement rider just allows you to accelerate either a portion of the total a portion of the total premium that was paid or a percentage of the face amount. So there are anniversaries of out in the 20th year or 25th year where the client can take either their total premium or a portion of that total premium back, or 40% of the policy face is going to be the lesser of those two numbers. I can kind of high level some of these things. The chronic illness rider, it is indemnity based. That's always a question that people ask. There is no elimination period. I will tell you it's not available in New York or California. And while we're talking about that, this product itself, while it is available, the new reprice that we're talking about today has not been approved in those two states. So just remember that the two states where today we're not going to have all the options available are going to be California and New York. Everywhere else we should be fine. Terminal illness rider is available. I'm not going to go in depth. You certainly will get some follow-up material on this after we have our call today. I want to highlight some of the competitive analysis. And again, when we're talking about targeting single pay premiums, I would say in a majority of sales where I see a single premium in those target markets, that 45 to 70, you're going to see us at the top. If the simple solution is, hey, I have a 1035 or a lump sum premium I want to pay into the contract, I want a max death benefit for lifetime guarantees, that is the highlight. Again, I mentioned not just from a premium standpoint, but at target, we also look competitive with the industry, and that has certainly been an improvement. Same kind of story when it comes to 5 pay and 10 pay. What you're seeing here, so that's UL specific, that's GUL to GUL. And you're certainly seeing movements in this business from a carrier standpoint. We're kind of leading the charge from a growth standpoint. A number of carriers have either exited the market, repriced, maybe limited how much you can roll over into this contract. MassMutual is taking a different approach, and you're seeing here, we know that it's not just GUL that's the market. We know that there's other options and solutions that are relevant for you and your clients. There's GIUL and GVUL, and certainly great solutions for your clients. But if you just want to see those in the background where MassMutual fits, again, target premium, competitive, kind of a different flavor than what you would have with a GVUL or GIUL, but certainly a relevant participant in that marketplace where a client is looking for lifetime guarantees. I'll kind of stop with the presentation part here. And I do want to talk about a couple of, since Kathy highlighted it from underwriting standpoint, one thing you're going to see from us, again, if you're looking at life insurance reviews here over the coming few weeks and you're looking for opportunities to close the year strong or even better than expected, there's some opportunities here. MassMutual is going to announce, I don't have the piece up here for you yet, but we have an underwriting match program that's going to be launched a week from yesterday. So it's going to be available on the 17th. There are a number of carriers on that list, including some of the carriers you probably know and love, Prudential, Symetra, Lincoln, Guardian, New York Life, where we're going to do an underwriting match program. So if you have a client who was able to secure standard or better, we're going to match that offer up to $5 million. You would need 2 formal offers in order to secure that, but we'll do that and we'll match you can use it for whole life, UL, any of these products. So that is certainly an opportunity. It closes at the end of December, so it is a year-end opportunity that we're running with. I'll also say here, and this is a real true niche with MassMutual, we've used this in a number of circumstances where, again, my goal is to help you develop opportunities in your book. If any of you, I know some of these might be lifetime type cases. These are very large, ultra affluent clients. But if you're running in, and talking with Dennis on the team and have clients who have large amounts in force, or you think you have a client coming down the road that is going to be seeking a large amount, we have, I would say, top-notch, reinsurance treaties. So MassMutual has great internal retention. We have 30 million with our whole life. With these products, this UL Guard, it's half of that. So we have 15 million for single life and 20 for survivorship. But where I'm finding the real true niche is not just with our internal retention, but we have 9 reinsurance treaties. And to kind of just give a flavor, most of the market, most carrier underwriters you're going to work with are working with 3, maybe a max of 4 reinsurers. We have 9. This happened to be a case I worked on earlier in the year. Mr. and Mrs. Client were looking for max death benefit. They gave the green light to their advisor to go out and basically buy the market, buy as much as they could possibly secure. I can't even remember how many total carriers. It was in the dozens of carriers they went out. At the end of the day, the clients ended up with over $1 billion in force. They happened to be, when they came to MassMutual, they had 600 or 700 million. They had thought, or at least the advisor had thought, they had tapped the market, both from an internal retention standpoint, but they had also gone out with one of the major carriers or multiple carriers to capture that reinsurance. They came to us looking for max internal retention on 2 lives for whole life. We found 30 million available internal retention. I turned to the advisor and said, hey, if you give me a shot, give me 3 days, I can do a capacity check and work with my underwriting team and go out and find out if there's any more. They slightly laughed and said, maybe you can double the case. And, figuring we were only going to find at best maybe $1 million or 2, which wasn't relevant to a client, a multi-billionaire. Lo and behold, we went out and found another 34 million on each life. So we went from 30 million to 64. And I will tell you that as an update, since this case study has been written, I highlight these on an annual basis. We consistently renegotiate reinsurance treaties. We found another 14 million. So this case went from 30 million originally to a total of 78 million on each life. If you have any type of capacity type opportunities, I will knock on wood, because we have 100% success rate in finding capacity where no other carrier is finding it. And that has worked for both, multi-generations of a family. Randy and I work on several multi-generation opportunities, and we've had multiple examples where we're even using those reinsurance treaties on juveniles for these ultra high affluent clients. So I'll wrap it up. I'll turn it over to Randy again. You have life insurance reviews. You're looking for opportunities to close your book strong for 2025. Life insurance review, 1035s, single pays, look for that underwriting match program and think of us if anytime you have a retention type situation, think of MassMutual. I'll turn it over. I'll just give him a quick plug. Our team here is second to none. Kathy, I got to update my bio. It's definitely been more than 15 years. So I'm probably north 6, 7, 8, 9 years of that right now. But I will tell you that Randy and his team are second to none from a way of the opportunities they've been involved in and what they've created in our book of business and the advisors they've helped out. I think your team has certainly witnessed that. And Randy has a long experience with Agency One, but he's certainly hugely valuable in my book. And I think he'll talk about a couple opportunities today where you can utilize UL and potentially even our whole life portfolio as well. So without further ado, Randy, I'll turn it over to you.
Kevin, and thank you guys for letting us have the opportunity to talk, and for everybody who's taken time out of their day to be on the call. I have to apologize. I'll keep taking my glasses on and off because I've reached that awkward point in life where my bifocals don't work on my laptop anymore. It's too far away to see with the close, and it's too close to see with the far. So I'm just basically blind now. But the best thing about this product, honestly, is the simplicity that this product has. As an advanced sales lawyer, this is pretty easy lifting, and it's for everybody in the call it is too. What makes this product great is you pay the premium, and the death benefits paid. It's that easy, right? I mean, we're talking about death benefit sales. So as Kevin already said, the obvious one is 1035s. I have a lot of very substantial 1035s on my desk where people, bought products with cash accumulation in mind. They've reached a stage of life where they have been successful enough that they don't feel they're going to need the policy cash any longer. And we're able to increase the death benefit for their heirs substantially. So we're able to take those policies, put them into this contract, and either on a second to die or an individual basis, substantially increase what the heirs will get. That's the low-hanging fruit with this, I suppose. As far as what I see from an advanced sales standpoint, one of the concepts that we've been doing a lot of is estate equalization for business owners, for family business situations. Inevitably, when I see a family business, there are 2 or 3 kids that the family has, and one of them is active, right? And the other ones aren't. So we're looking at ways to equalize the estates, and this product works well. It's a low-cost death benefit solve that allows the family to easily pass the business on to the active child and take care of the children who are not in the business at mom and dad's death. For those of you who haven't used the Simplify tool, Mass has a great presentation concept software tool. For those of you who have worked with me for years, it's much like the ones that I've built in my past life, where we can dump the illustration into this tool, and it will create a client presentation on the sales concept. The estate equalization concept is in the simplified tool now. Kathy, I don't know if this has been widely shared with your agents, the people on this call, but the simplified tool is really a nice presentation tool, and the estate equalization module is one of the ones that I'm doing a lot with this new NLG product. Something else that I've got a lot on my desk right now is situations where one of the spouses has passed. It seems like inevitably dad has passed away, mom is still alive. And there was a credit shelter trust that was created at dad's death. That credit shelter trust has substantial assets in it, but mom has a lot of her own assets as well. And the fact is, mom's not going to have to access that credit shelter trust during her life. So that credit shelter trust is going to be held until mom's death and pass on to the heirs. It's outside of the estate tax, right? So there's going to be no additional estate tax on it, even for wealthy, affluent families. but there's still income tax. That credit shelter trust is subject to income tax really at the highest rate right from the start. So, the family, the advisors are looking for ways to reduce the taxation, reduce the tax burn on that credit shelter trust. So we're seeing situations where lump sums are being put into this new product on mom's life, right? It's, as we all know, life insurance is a tax, if you will, a tax-free asset. It's not going to have any income tax during mom's life. So we can create a predictable legacy for the heirs in the credit shelter trust without any current income tax burn in that credit shelter trust now. So part of that credit shelter trust, I'm not suggesting you put all of it in there, although I have seen situations where that's been looked at, but take some or all of that trust and dump it into a single life on mom's life, which is going to provide a very tax efficient and predictable legacy. So existing credit shelter trusts in situations where you have one of those, and there are a lot of those out there. Some other situations that I've been illustrating with this are qualified plans, especially for families that have taxable estates. If you keep how qualified plans work, they're going to be subject to both income tax and estate tax at death. So we're seeing situations where people are taking distributions from the qualified plans and they're putting those distributions into an ILA funding an NLG contract, either on an individual or a second to die. So you have to look whether that makes sense. Certainly it's only for families who aren't going to need the qualified plan, during their lifetime. But if you have a situation where the qualified plan is not going to be used, it's not always the most effective and most efficient asset from a tax standpoint at death. So we're seeing a lot of qualified plan distributions being moved into irrevocable trust and funding the NLG contract. I have a couple of nice cases on my desk that I haven't done in a long time. Charitable remainder trusts. I can't think of the last time I had done a credit shelter, a charitable remainder trust. I've got two right now where somebody is doing a CRT and they're going to do a wealth replacement trust. And the policy that they're looking at to fund the wealth replacement for the kids is an NLG contract. Again, efficient death benefit. So mom and dad have highly appreciated assets in their estate. They're going to put those into a CRT. The CRT will liquidate that without any current, taxation on the liquidation of the assets. That credit shelter trust will pour out during mom and dad's lifetime. It will have an income stream to mom and dad are going to use some of that income stream to replace that asset that won't be passing on to the heirs. So this is something that we used to do all the time that I haven't done lately, but with the increase in the interest rates and this new NLG product that we're launching, I'm starting to get those on my desk. So CRTs are something, again, to think about if you haven't looked at those lately. And something that I really love and love talking about, and would love to do a deeper dive on at some point for this group if you'd like to hear about it. The other thing that I've been talking about a fair amount and seeing some work with is conservation easements. I don't know how many people on this call work in the conservation easement space, but it really is a good idea to talk to clients about because even maybe more so than families, conservation easement for some people is really a hot button, right? For people who hunt and fish and hike, conservation easements, people's second homes up, in the mountains or in the wetlands, those kinds of properties, putting a conservation easement on them and being able to preserve those properties forever, especially for their kids and their grandkids. That's really a hot button and that can really open up a lot of other planning. And so I love talking about conservation easements. If you don't understand how conservation easements work, it's really like a charitable remainder trust in a lot of ways. What you're doing is you take a property and you restrict its use. So if I have a place up here in Iowa. I live half the time in Iowa, and I have a place near the Mississippi Mississippi, and there's wetlands everywhere. I have every imaginable migratory bird you can think of comes through there. Geese and ducks and swans and pelicans and then eagles, and they all come there and they live there, and it's just a wonderful spot for people who love that kind of thing. And I can put a restriction on my property there, those wetlands that we have there, and we can keep them as wetlands forever. And the value of that conservation easement is the difference in the valuation of the property if you sold it to the highest bidder for whatever use, and what the property is worth as restricted. And sometimes when you have properties like that that are near large areas, in developmental areas, that restriction can be a huge value. So you can take and restrict the value of that property and get a tax deduction equal to the reduction in the value that that restriction done. And then with that tax deduction, people will buy life insurance for extra a legacy for their heirs. So essentially, it's like a charitable remainder trust. You're taking and you're conserving that property, taking the tax deduction, and buying life insurance as a wealth replacement asset for your heirs. I've got quite a few of those on my desk. Actually, I've been out and doing some conferences on that. I've been speaking on that, and it's really been good at getting people interested. And the agents that have worked in that conservation space find out that once they get the client interested in the conservation easement, they're being able to move more into a traditional planning with some of the other estate planning as well. So it's a great foot in the door. The other thing that has surprised me, that I've had some success with this product already, and I never thought about it when the product launched, but it's happened in the first few weeks that the product's been out. I guess we're about 5 weeks out into it now. I'm seeing it actually owned as a business insurance purchase. People are buying this as a key person policy, and they like that. And Kevin said I can't call it an ROP. I have to call it I took my glasses off. Surrender value enhancement rider. So that non-ROP that I'm not allowed to talk about, people like that about it because they're able to put that policy on the books. And the thought is, if you have a 40-year-old key person, by the time they reach retirement age, the business is into a situation now where if the business wants to get the premiums back that they paid, they can cash that out and you get the full value back again. And all that key person policy has cost is the time value of the premiums that were paid. So it's a low-cost, permanent insurance solution that has the option for the business owner to either keep that policy when the key person retires, or they can cash it out. So I'm seeing interest in that policy for key person sales. And they also like the fact, as Kevin said, that it's got a chronic illness on it too. So the combination of the surrender value enhancement and that rider have made it something that has been, from a key person perspective, has been well received. So really, with the NLG product, that's kind of my hit list. That's, I think, 7 or 8 things that I've had success with so far that we're seeing sales and we're illustrating and getting a lot of talk about. Kind of the other thing that I just wanted to talk about, and since we promised that we're going to try to get out of here at 30:35 or so, I don't want to spend a whole lot of time. But the other thing that I spend a lot of my time on is business insurance and working with business owners. And I do a lot of small case, if you will, non-qualified deferred comp, whether that is a restrictive endorsement or whether that's a true SERP, or whether it's a split dollar structure. I'm doing a lot of 1 to 10 life non-qualified deferred compensation type casework. People like the certainty, like the predictability that the whole life brings in that space. If Kevin's my key guy, I'm a business owner, and Kevin is the most important person in my organization, and I want to do something for him. I don't want that funding policy to be all over the place. I don't like like that result to be up and down like that across the board. I like to be able to have the certainty that when Kevin reaches retirement age, that I'm going to be able to provide the benefit that I've told him that I'm going to when he reaches retirement age. So small business owners like the whole life in that small case non-qualified deferred comp world. And I do a lot of it. And we're coming out with a new version of our early cash value on that. We're looking at doing some updating to our simplified issue. So I'm pretty excited about where this is going to go in the next few weeks. I think, Kevin, I don't know, we're probably somewhere between 2 and 4 weeks away from being able to launch that. So when that's finally done, Kathy, we can come back and talk a little bit more about that. But that new SI program is close, and and it's going to be a nice fit with that early cash value rider that we can put on the whole life contract. The other thing that I do in that space a lot of times is sometimes it's not just whole life. I'm doing a lot of blends. I'm doing a lot of VUL with a whole life blend because, again, it's the certainty of the whole life, the predictability of the whole life allows you to blend the VUL and the whole life. And I do sometimes 70% on the variable with our Apex product and 30% with the whole life, or maybe 60-40 blend. And what that allows you in any kind of a cash solve that you are doing for the non-qualified, that cash solve in the down years, you can pull from the whole life contract and not from the variable contract. So you're able to illustrate slightly better results than just with the whole life, but have a lot of the predictability and the stability that comes with that blend. So, using the whole life and the variables of blend is something that on accumulation sales, I really like. And we see a lot of that being done either in the business context or, just people doing a LERP sale or maybe a spousal access trust. So, that's the other thing that I'm seeing that is, not the new product, but with the existing portfolio that we have. So, that's kind of, Kevin, what is keeping me busy right now. I don't know if you want to add anything from an advanced sales standpoint. I work with you very closely. You see what our team does. I don't know if there's anything you want to point out, but those, that's kind of my hit list of things that I jotted down here.
Yeah. I would say that's extremely relevant. I'd say we've worked best. If there's anyone, Agency One certainly knows how to get in touch with us. If there's anything you want to dig deeper into, learn more about, you see opportunities in your book. Randy's been, hugely instrumental, and we'd be happy to have, one-off conversations about particular clients or situations in your book as it relates to what Randy brought up. Any other topic, I think this UL or GUL, I look at it as MassMutual, a big step in the independent distribution. Many of you think of us as a whole life company. Again, we will remain, a whole life and be very competitive in that space, but we're building this book, and there's more to come. I mean, Randy mentioned there's, guaranteed issue coming out. We're launching a honeymoon rider, or relaunching a different honeymoon rider. If any of you are in the financing space, certainly relevant there. Long-term care riders, there's a whole host of things that you're going to see from MassMutual in the coming months. So yeah, certainly, get a hold of us if you want to talk about any one-off situations. I think
I see a hand up, Kathy. It looks like
Yeah, we have a
Matthew.
question. We've got a question from Matthew.
Uh-huh.
And Matthew, my apologies. I thought that you worked primarily with BSMG, but I'm being told by my back office that you work with BUA. Matthew asked, is there comp for over target, 1% or more, like 2 or 3%? And I think that he had also asked about trail commission. For the comp over target, I have referred Matthew back to now BUA, because BUA will be able to tell him what his commission is. But what about trails?
Yeah. Trails, so direct to producer. We do pay trails. So years 2 through 10, it's 3%. In years 11 plus, it's 1%.
Terrific. Thank
Yeah.
you. And Matthew, I would suggest if you have any other questions regarding compensation, again, please reach out to your wholesaler at BUA and they will be able to help you. Does anybody else have any questions for Kevin or Randy. I am not seeing anything come in. So, my takeaway is products that are being relaunched, more capacity, new opportunities, great sales ideas. I get asked all the time, do you have a contract with MassMutual? And there are people, unfortunately, that that are remembering the old days of MassMutual and how things worked. And Agency One and BUA and BSMG have phenomenal relationships and contacts. I can tell you that when an advisor has asked me to get something done at MassMutual, whether it be a technology issue or just some extra attention that they needed, MassMutual has 100% of the time stepped up and helped us out. So it's a pleasure to do business with them, and we look forward to doing more and ending the year strong with MassMutual. So if nobody has any questions, any other questions, I'm going to give you back the rest of your 12 to 1 hour. Oh, wait, I think something must have.
Yeah, it looks like Matthew O'Brien raised his hand again.
Matthew, we're gonna go offline with you. And yes, you can get a quote. And again, we need to reach out to whoever you're working with at BUA. So we will go offline with that. Before we end this webinar, Lisa, we have some upcoming webinars that perhaps you can tell these kind folks about.
Sure, happy to. On September 18th, we have a webinar with Pacific Life titled Strategies to Optimize Business. The speaker is Carlin Snipes. That's on the 18th at noon. We look forward to that. Eastern time, of course. These are all Eastern time. On the 25th, we have another version from John Hancock of You're the Boss, Part 5, Life Insurance Solutions for Business Owners. And then that's at 3 p.m. Eastern Time on the 25th. And then finally, on the 30th of September, we have CCB speaking about current trends and a market update in life settlements. Drew Griffo and Steve Ruggieri, who are partners at Commonwealth Capital Brokerage, will be the speakers. So we look forward to offering those up to everybody, and we hope you can certainly attend. Thank you.
Lisa, thank you very much. Kevin and Randy, thank you very much for your time, your insight, sharing what's happening at MassMutual with the Agency One, BUA, and BSMG advisors that are on this call. This call has been recorded. We will be able to provide you with copies of the materials. If you have any questions, comments, concern, need help with underwriting, or anything related to your business, please reach out to myself, Gonzalo, Dennis, if you're working with Agency One, or your contacts at BSMG or BUA, and they will be happy to help you. Everyone is trying to end the year strong. So come to us and we will help you get it done. Thank you for your time, and we hope to see you on our next webinar. Take care. Thank you, guys. Bye.